Okay, we are live. What's going on, guys? All right, let's go ahead and get things started. So, for those of you who are not members of the trading floor that are just tuning in with us, we had this excellent trade that we had set up based on a couple of harmonic patterns and a beautiful double top formation in the SPY. So this has been developing for the last couple of days. We had the market push up to the upside and then create this double top right here. And this coincided with a bearish divergence along with a bearish cross down outside of our price cloud indicator. This meets all of the conditions for my trading strategy. And also, big shout out to the Peaceful Lizard, also goes by Hikari, who created this indicator and has been a welcome new face on the trading floor, adding his knowledge, expertise, and development prowess to creating new indicators for the trading floor. So thank you very much, dude, for being a part of it. So since we've got this beautiful trade setup, we had a initial entry at the top of the market right here after we got this bearish divergence, and there was an opportunity to average up on the position after a move down. If you did end up taking profit here, then good on you. But we had another lower high right here where the SPY rejected off of previous support right here. So this is support that became resistance right at 384. And since we got that heavy rejection, the SPY gapped back down to the downside, all the way down to around 378. We briefly attempted to break out back above 380 before printing an evening star candle pattern, and we have been in a downtrend ever since. All of this has come together in the form of a few different indicators, namely a diamond top pattern, which if we zoom way out, then you should see this big triangle pattern. This is actually a diamond top where we had two supports below us and a lower low made here. So as soon as we touched this resistance, we knew that a big sell-off was going to come, and now we are testing support here at 375. Now there is a harmonic that is showing up here. This is a bullish harmonic, a cipher pattern as a matter of fact, that normally we would trade to the upside. However, since we are in a downtrending market and we're near the top of our most recent bull run, if we actually go all the way back out to the hourly chart, you can see that we are forming the shoulder on a much larger head and shoulders pattern that's been forming over the last several months, basically for half the bear market that we've been playing. So for that reason, we are absolutely not interested in taking any long trades. And given that we've had so many repeating bearish patterns between this ascending triangle, which broke down to the downside, we had a retest to try to re-enter or go above this ascending triangle and failed here. All of this is telling us that the market is not going back up. We're establishing new lower highs. We've had multiple bearish crossovers on the PPO outside of our price cloud. There's nothing really working in favor of the bulls right now, so this is really just the bulls fighting against the trend at this point, and pretty soon we will be very likely to see that capitulation that we've been waiting for. So if you didn't get the entry that I called out this morning, that entry was made at, it was made right around, I did a initial trade right here at the top of this candle and got an entry just around $378.20, and then averaged up on the trade and kind of doubled down on my risk a little bit. The initial trade was for a risk of around $500. Please keep in mind this is a paper trading account, so this is not risking real money. We're just here to demonstrate the power of technicals and teach everybody how to use them to their advantage. And we will be exiting this trade no matter what before the closing bell today. Okay, I see somebody saying it's really blurry. Let me see if I can close a few things and get some bandwidth. Sorry about that, guys. I just got a lot of software open right now as part of the problem. But if I close down a few things, you should get a better signal here. Okay, let's see if that works a little better. Okay, says that we've got a good connection here. You guys let me know if this is getting through to you. If anybody else is having problems with latency, just give me a shout out on the YouTube chat. If you guys are new to the stream, welcome. Thanks for being a part of the Hell's Trading Floor team. If you guys wouldn't mind, please leave a like on your way in and subscribe to the channel if you're not already subscribed. Helps out the YouTube algorithm and brings more people in to get this information so that we can help everybody out. Man, this is an excellently timed trade. I couldn't be happier with this. So for those of you that do not see the same things that I see, the way that we traded this is after we had actually been watching this morning after this gap down, and we saw that we formed a descending triangle. Descending triangles are just a triangle that typically shows up at the top of a market, and it's usually shows up after some weakness. And what you end up seeing is the market will try to fight for previous support and then drop back down and then fight again. And what you consistently see is a flat bottom. That is what's characteristic of a descending triangle, is you get lower highs and then flat lows. You want to draw a descending triangle across the bodies of the candles, not the wicks. The wicks do not count. And what you're looking for is for there to be a closing candle below the triangle's support line. And we had one candle close here, we had one re-enter shortly after, and then we had a second candle close below. So we wanted to make sure that this completely closed below. I got a little bit of an early entry here, and then after this candle closed down below even further, then this was our confirmation. So this candle right here, that is the confirmation candle. And you would be able to get an entry right here at the support line if you actually set up a trade to create a sell order here. Then you would have gotten filled at around $3.78 and 10 cents. And the trade setup for this one is a 3-to-1 risk to reward ratio. I just set myself up with the take profit at the last support that we saw in the market at around 370 last week. So that is the take profit. But I will be exiting this trade today no matter what, because we want to make sure that we're taking profit and not leaving anything out on the table. If there is an opportunity to get back into the trade, such as a big gap up in the morning, then you can always re-enter higher and then continue riding the trend to the downside. And that is why we don't leave the trade open overnight, because you can't do anything about it overnight. There's nothing you can do. and you don't want to let your trade be subject to the whims of the market or high frequency trading algorithms. Yeah, Sean S. The bounce on the VIX is definitely an excellent setup. We've been watching VIX signals for a while, especially on the daily chart. The daily chart was a perfect 3-candle bounce off of this previous support just below the 200 daily EMA. So as soon as we crossed below this and we didn't see continuation, we just saw it hanging out in this area. What I was waiting for was exactly this candle. This is the closing candle on the VIX that I've been waiting for to confirm a move to the upside. So this is excellent. My expectation is for the VIX to continue back up to the top of the market, and then your take profit would be somewhere in this range above $30 on the VIX. So that is a trading opportunity if you want to take it. You've got several confluences in your favor. A bounce off of the oversold line of 30 on the RSI. You have a crossover outside of the price cloud on the price cloud oscillator's MACD indicator. And you also have this bounce off of this area of support for the VIX just below its 200 EMA. So all of these are bullish signals, which you can compare to history. This was another example, and then this was another example. And you can see that the VIX over the next 30 days can reach highs upwards of 80 to 90%. And we've been in this consolidation wedge for some time with the VIX, but that doesn't really mean much when you're looking at something like the volatility index. But all the same, we do expect that the VIX will continue to get tighter and tighter with its consolidation until we actually trigger the mighty capitulation crash, at which point we'll probably end up seeing something like this, where it just heads off the screen and you see the market selling off like, honestly, like the Titanic sinking to the bottom of the ocean. That's kind of how this whole journey's felt like. We're just like, we're riding on the Titanic, we're time travelers, and we know what's going to happen, but we just can't get out. We're stuck. We're stuck on the ride, and we're just trying to figure out, like, okay, what am I going to do when this thing finally hits the iceberg and I have to make a run for the lifeboats? Could this be a bear trap if CPI comes in lower tomorrow? Well, I suppose that is possible, but I don't think that the CPI will print lower. That's the thing. The jobs report came out still pretty strong. They had a little bit higher unemployment, but they're looking for much more positive momentum than they actually received. The other thing is that the initial jobless claims from this past week came in disappointingly low. And you might ask yourself, well, if people have jobs, isn't that a good thing? Like, do we really want joblessness? The answer is, well, the Fed doesn't. The Fed wants to see more joblessness because it puts pressure on the economy. They feel like if people are struggling and if they're not working as often, they're not bringing home as big of a paycheck, then that's going to decrease consumer spending. And that's how they look at it, which is, in my opinion, a pretty feckless and heartless way to look at it. But that's the way they operate. They operate based on the numbers. So let's keep an eye on what the SPY is doing right here. It looks like it's finding a little bit of support. A lot of people worried over, and many stocks can't do anything but stay convicted. CPI will be hot. Hey, Dockside Trader, nice to see you again. If you guys have requests for any other tickers, we've been trading the SPY for months now. This is basically our safe haven. where we just trade based on whatever the prevailing trend is, and we take profit in both directions on the SPY. So if you guys have any questions about any big tickers that you're looking at, small cap stuff, or favorite companies, I'll be happy to do a little bit of technical analysis. I do have to go at 12:30. I have to go out for a work meeting, so I won't be able to stay until the closing bell, sadly. But I will make it a point to come back if I can after the bell and join up with the trading floor to wrap up any closing market analysis. We'll go over everything. Is AMC due for a big bounce soon? That's kind of up in the air, but I'll go ahead and do a little bit of technical analysis and we'll take a look at it. So a couple things with AMC. I did see that the earnings were a nice surprise. It's very good. The guidance still shows that they are having some troubles paying down debt, so that's going to be their big priority. There are a couple, excuse my grammar, there are a couple of confluences for a bullish trade on AMC right now. It is at recent lows. It's at a 52-year low right now. Or a 52-week low. Jeez, man, I can't even I can't even English right now. So AMC hasn't traded down in this area since April of 2021. And keep in mind that AMC did split, air quotes, because of the APE spinoff. So this is equivalent to about where AMC was trading back when it was around $8, between $8 and $10 going into the spring of 2021 before this split or the APE offering happened. So AMC hasn't been here in quite a long time. There are some things that I can point to for support. For right now, it looks like we have a few areas of support down at around 450 to keep AMC held up, but we are trading this bear flag right now, and the conventional wisdom of technical trading indicates that AMC would need to drop down to around $4 before it saw some support. Doesn't mean it has to, but it's just what technical trading and charting indicate. There's a couple of other bearish indicators like this cross down on the MACD showing that momentum to the downside is still remaining very strong even after this big sweep to the downside and this pullback. The pullback was actually not very severe, so there could be some continuation in the market. It pulled back to the 23% fib retracement level, and it's been continuing to the downside since then. Just pointing to this area here. When I say fib retracement level, I mean I set my original starting point to the top of the flagpole for this bear flag, and then we draw it down to the bottom of the flagpole, and then you see where the flag hits its highest point, which is right here. It's actually just below the 38 fib level, right in this area, and then it continues selling off. That's clear continuation pattern. So for the time being, AMC looks like it's heading us way further down. For that reason, I would be really hesitant to buy just yet. There's probably going to be better opportunities to buy it in the near term. Carlitos Way asks, what's my take on APE? Still holding my AMC and APE and thinking on buying more AMC. If I was to buy anything, I would be buying AMC, but even though I'm not doing that right now, APE's entire purpose is a dilution mechanism to get AMC more cash so that they can pay down debt. So there's really no benefit to buying and holding APE. Even if APE eventually gets added back to AMC, if it gets converted back to the common stock, that would massively devalue the AMC common stock. So it's really not in your favor to do so. When you see a good price on AMC, though, you can always buy more of that, and the common stock comes with continued voting rights, and you do have that going for you. APE does also have voting rights, and depending on how far down it gets diluted, at some point the voting power of APE could exceed the voting power of AMC shares. But the problem is that Adam Aaron and the executive team can rewrite the terms of how APE voting privileges work. So at any point they can change how it operates. So that can be kind of a problem. That's the risk that you take by looking at APE. So the way that I look at APE is, on the surface, it's a good thing because AMC does desperately need cash in order to pay down its debt. If they didn't have this massive debt hanging over them, then they would be profitable. But because they have this huge debt, they have to pay more in interest, and they have a lot to pay down. So it's preventing their company from being profitable over the long term. And that's not what we want to see. We want to see AMC making money on the whole. And right now they're not making money. They're paying down debt all the time that they would otherwise be using to make the company even more profitable, buying more theaters, upgrading their theaters to make them, more luxurious and increase the customer experience. Do I think that SPY will rally before end to get a trap going? Well, it kind of already did. That's kind of how I'm looking at this last push. This rally was, it was one more push right before it finally tanked. And this qualifies as a double top formation, and it's a part of a head and shoulders. If you go all the way out to the daily chart, you can clearly see a head and shoulders formed right here. So, make of that what you will. But as far as the technicals go, this one's a very clear head and shoulders pattern to me, and it coincides with this bearish anti-butterfly harmonic that puts a price target all the way down at 320. So I'm I'm pretty confident that it's just going to go down from here. It doesn't mean that it couldn't pop a little bit, but to get back above the peak of this right shoulder at 390, I think is not reasonable. That would be expecting a bit too much from the SPY. The other thing that tells me this, and I'm looking at a big comparison between all the major market sectors, but looking at the Qs versus the Dow Jones, this chart right here is the Qs, that's the tech sector or the NASDAQ, and this is the Dow Jones, which is primarily made up of industrials and defensive sector stocks. And then you have the SPY down here in the blue and orange. And then up here, this chart right here is a ratio chart of Qs divided by the Dow Jones. So the purpose of this is to tell me what's performing better. When this is moving down, then Dow Jones is outperforming the Qs. When this chart is moving up, then the Qs is outperforming the Dow. And throughout this bear market, if you go all the way back in the daily chart, we got to go, oh man, this really screwed up my chart. Give me 2 seconds to fix this really quickly, because this is worth paying attention to. Everybody can learn something from this. Let's see if I put the SPY back down here and the Dow Jones right here. Okay. So if I stretch this chart out, and you look at this ratio chart over time, what you will notice is that every time this the market pushed up, pay attention to wherever the SPY rallied big time, right? Big rallies, big rallies. Look at which of the two sectors outperformed. Was it the Qs or was it the Dow? And if you look every single time, the Qs consistently outperformed the Dow with every major market rally. You can tell because the slope of the Dow was slightly lower based on percentile increase. The Dow was less of a performer, while the Qs was moving up much stronger. Now, if you look at you look at the SPY, and you know that the SPY is made up of a mixture of both tech and industrial defensives, then you can infer that it's the Qs that's leading or pushing the SPY up. It's the tech sector. It's the risk-on sector. Well, if you look at this, you see that we've had 5 big rallies in the market, and all 5 of them were led by the Qs. So 1, 2, 3, 4, 5 market rallies, the Qs led. Well, this time, the Dow led this last market rally. So that's interesting. This difference is what tells me that the market is risk off. And that tells me that the market is going to go further down. This is a late stage crash indicator, which it's more obvious in this market because our current market, as compared to 2007 and 2008 before the great financial crisis, the Qs were not as strong throughout. It was mostly the Dow that was the strong one. But there was a divergence between them both right at the very end. The Dow surged to the top and the SPY dropped massively at the same time. And finally, once they hit that last little hump in the market, that's when the SPY collapsed completely. The whole S&P 500 stock market index just dropped off a cliff. The Dow did too, but the SPY did the worst. And it was led by stock tickers like Apple, Microsoft. Trying to think of who else was a big name at the time that crashed. I'm going off of memory. I could go back in my charts, but I'd have to fix this again if I did. In any case, the risk-on sector is what dragged the entire market down, along with big banks and the major producers. So once that happened, that caused the entire market to drag at the same time. So in my opinion, this divergence is alarming to me because it's telling me that the market that's performing right now is not being led by tech. And that means there's very little faith in the market. So this is an indicator to me that investors are very scared and the institutions are very scared. So they're parking their money in industrials and big consumer stocks that continue to perform defensively over the long term. You think of defensive sector stocks like Miltech, Raytheon, Boeing, Lockheed Martin. There's other defensive sectors that I can think of that are linked to financial institutions like the big banks. Bigger ones would be things like 3M or DuPont Chemicals. Big producers of necessary goods for end product production. And once those start to underperform, because inflation's still really hot right now and logistics are getting really, really difficult, you see the energy sector is even worse. If you go to the XLE index, the XLE index is taking the hell off. And that tells me that gas is about to get stupidly expensive. So gasoline, which we all know is still already stupidly expensive, you look at how XLE is performing, and you can see that it's moving along with the Dow. Everybody that is a producer of gasoline or petroleum products is having a field day in this market right now because it's so costly to get gas and and it's causing logistics problems. That's rising the cost of everything. Here's another thing that a lot of people aren't aware of right now. We are running out of diesel fuel in America. We are almost completely out of diesel fuel. And when we run out of diesel fuel, guess what is the largest user of diesel fuel in America? It's trains, freight trains. So diesel-powered train engines make up the bulk of diesel usage in the United States. And when we run out of diesel fuel, we only have a few months' supply left. So if we don't get new diesel fuel, then guess what? All the trains stop running. When the trains stop running, then you don't have any transcontinental transportation of large raw materials like wood, steel, fuel, and all sorts of other products that are necessary, absolutely necessary for the continued functioning of the economy. Yeah, food's another one, actually. Big farming communities, they transport by train. The breadbasket of America is all throughout like Iowa. You got like Iowa, Illinois, Ohio. All of those areas in the Midwest and throughout the Great Plains are big farming areas. Nebraska, Kansas. All of those states rely on rail to transport huge amounts of goods very quickly across the country because the trains can run continuously, whereas trucks have to stop. So trucks transport finished goods, trains transport raw materials. So if the diesel stops running, the raw material transportation stops. And if that stops, then that rises the cost of all finished goods, canned goods, boxed goods, dry goods, furniture, anything that people need to live and subsist on, clothes, all of that stuff stops getting produced very suddenly. And it'll take a few months for it to finally catch up with us after the trains stop running. But when that happens, you can bet your ass that the entire market is going to implode because inflation is going to skyrocket with all the cost of finished goods taking off to the upside because because they can't produce enough of it. You're going to see a whole bunch of businesses just start going out of business because they can't get product in the door to sell to people and they can't afford the cost to bring it in. So all of this is heading very rapidly towards disaster. City Blades, thank you for the confirmation. City Blades says, I can confirm. I live in Kansas and there are train tracks everywhere. It's like a blues song up in here. So you can see how important this indicator is for me to see that the industrials and the energy sector are skyrocketing while the tech sector is just kind of limping along is not good. It's not good. By itself, this doesn't mean the country is collapsing, but given the whole narrative of what's going on with inflation, fuel costs rising, it tells a story. I'm going to go ahead and head back over to the SPY and we'll catch up to this thing. Let's see. SPY is doing a little bit of a push. I was about $2,000 in profit just a minute ago. Looks like it's doing one more little push. See, now this is heading towards free fall. What does my Cleveland Cliffs trade look like? I was trading Cleveland Cliffs and I see this descending wedge on it. Okay. Cleveland Cliffs, if nobody's familiar, they're a steel producer and refinery. They also transport steel. This is a pretty good company. Okay, it just hit its 50% retracement level, so that's my buy signal. I'm going to go ahead and buy Cleveland Cliffs right here. This is what I was waiting for. And I'm going to trade it to the top of this. I'm going to trade it to the top of this wedge. I'm going to do a 0.5% risk. That's about 400 shares. Okay, there we go. So we'll wait for that to fill. Super, super close. Okay, spies fighting for air. We have some resistance right here. So if it gets rejected here, then I'm probably going to add to my position. If we get a confirmation candle for this to the downside, then I'm going to add to this position and let it ride further down. And I'm actually going to adjust my stop loss because now I have confidence that the trade is right, and I want to make sure that no matter what happens, I'm going to close with a profit. So even if something crazy happens, we get a big spike of volatility, I'll take profit on this trade. The show with Neil says it has to head into CPI with bullish sentiment. That's the rule. AO, no, I do not have a favorite dividend stock personally. I don't trade based on dividends. If I was to be an investor though, and I wanted to buy something just to hold on to it, I know that Ford offers very good dividends. Trying to think of any other companies. The banks, the big five banks, tend to give decent dividends. Although I would never invest in them long term. They don't really perform well. Big oil stocks, like you could try Exxon Mobil. That might be one that pays out a decent dividend. McDonald's, yeah. McDonald's is a good dividend stock. That's actually a good point. Other defensives like Raytheon, Lockheed Martin, those ones also pay out decent dividends as well. Johnson & Johnson. Thanks, Jason. That's actually a good one, too. Johnson & Johnson's a very good defensive pick. Okay, market makers are trying to fight this, so I'm closing my position now. I see what the market maker is doing, and they're going to try and stop loss hunt a bunch of people, so I'm going to get out, and I'm going to wait for another re-entry right here. I'm going to sit here with an order waiting to fill. The market makers are silly, man. They're trying to push this thing back up to 378 because because that's where Max Payne's sitting at today. You know what? As a matter of fact, I'm just going to stay out right now. I'm going to stay out for the time being because we have this bullish cross on the MACD here, and we have another one on the 15 minutes. So I think that I'm out for the day. I'm out on that position. Took a $1,400 profit. Let me actually get the exact number. No, a little less than that. I got just under 1,200, $1,192 profit. My risk was 1,700, so it was a pretty risky play. If I had stayed in the position and left my stop loss where it was, then I could easily see this riding all the way down back to the downside of 365. But the idea was for this just to be a day trade. So since I was so far in profit and I really want to make sure that I am taking profits and encouraging everybody else to also take profits, that's a good level. It's not a perfect 2-to-1 risk reward ratio capture. It's not even a 1-to-1. But since we got such a good entry on such a large position, it was better that I take that money off the table right away and not leave it hanging out there. Besides, I'm only going to be able to keep streaming for another 20 minutes, so I won't be able to watch the market to see what it does, and I don't want to miss an exit at the end of the day. TradingView won't let me exit my paper positions at the end of the day if I go past market close, which kind of sucks because anybody can trade after hours. And Johnson & Johnson behaving like a sexy beast. Yeah, Johnson & Johnson has been outperforming pretty well. All right, I'm going to adjust this trade. There we go. I got my fill. Risk is $500. Take profit is $1,500. This one will be swinging overnight. I'm trading Cleveland Cliffs to take profit. I actually want to take profit at 15 exactly. There we go. And the thesis on this trade is that it's trading within a descending wedge, and it's had these nice pushes every single time, and it always comes with the biggest push after a 50% retracement. So here we had a big drop to the downside. It hit the 50% retracement level, kind of undercut it a little bit, and then went sailing. And it did it again here. Had a big push to the upside here. It tapped the 50% retracement level and then completed the move to the top of the descending wedge. And now I trust it will do it again. So we just tapped the 50% retracement level, actually undercut it quite a bit. So after tapping that, I want to trade that all the way out till the top of this ascending wedge. And if the move happens very quickly, then I expect to take profit by Thursday or Friday next week. This will just be a 10-day swing. The way you could look at this is I'm trading Elliott waves. It's not perfect Elliott waves, but it's the same principle. You just look for patterns in the stock, and even though they're not perfectly matching patterns, you can rely on tools like Fibonacci to give you some take profit levels, stop losses and take profits. Scrap Queen posted an article in chat, key points regarding rail strike update. Oh, thank you. That's actually really, really good news. Yeah, there was a rail strike. I almost forgot about that. Let's go keep an eye on the SPY again, see where it's going. Yeah, is it still dropping? Looks like it is still dropping. Okay, so we had that rejection that did play out. I'm going to stay out of the market for the day because that's what I said I was going to do. If the market does end up gapping up tomorrow, then I'll re-enter this trade wherever it gaps up to, and I will set the stop loss at the last resistance or just above the previous resistance. So if for whatever reason the market makers push the price up to 378, then I will probably actually look to get a re-entry right about that level, and I'll set my stop loss back above this resistance here. So this is where my original trade was sitting at. I had my original stop loss. I actually think I had it set here, but if they get a big swing out of this and they push the market back to the upside all the way up to 378 before the end of the day, then I'm going to set my stop loss way up here, and I probably won't enter that trade until tomorrow. The take profit level would still be 370 for that though, and that would be a 2.5 to 1 risk reward setup. The ideal exit would be before Friday. AO says signals a strong, steady horse. Insurance plays in general are moving pretty strong and steady. Aflac is one that I had been watching for a while, and I kind of let this trade just slip by. But if you look at how it's performed over the last 30 days, it's up 22% over the month. It's kind of crazy, actually. There would have actually been a nice opportunity when we had that big spike down after CPI data was released in October for the month of September. That would have been a beautiful trade. Aflac for a 30-day call option, just slightly out of the money. That would have been a huge win. Their earnings were fantastic. Overall, the insurance industry is probably going to continue to do really well. VIX is closing above its 200 daily moving average, so that's a confirmed sell signal for the market. VIX closing above $26 is confirmed sell signal for the market, buy signal for the VIX. If you like to play the VIX, then here's your sign. Thoughts on the 25% pop that Excella had yesterday before it dropped again? Mostly shorts covering. I wouldn't trust that. For those that missed the notice, I did get out of Excella a long time ago. I let people know that it was clearly being manipulated, and every time you see one of these spikes, this is shorts exiting. Shorts just exiting their position, taking profit, and then they push it back down again. By the way, if you guys are just joining the stream, thank you guys for jumping in to trade the market with us. If you are just walking in, we'd appreciate it if you leave a like on the video. That helps the YouTube algorithm, lets them know that we're creating something that's worth watching. And if you're not already subscribed to the channel, if you wouldn't mind doing that also, that way you get updated every time we do a stream or I release a video with market updates. And just a heads up to everybody who's listening, I'm going to try to see about creating more small videos as opposed to putting out all this very long form content, because it seems like it's difficult for people to watch through like my 30-minute updates on literally everything. So I'll try to create more bite-sized videos that you guys can check into for things that you're interested in and separate out the different tickers a little bit more into their own clips. Hopefully, if you guys wouldn't mind, I could use some feedback just to make sure that that's more in line with expectations. Trying to help give everybody the kind of stuff that they want and make all of the content more digestible. Okay. Am I going to get greedy because the market is throwing out another top? Yeah, I am. I'm going to try and scalp this really quick trade right here. I see this bullish divergence, but I'm getting a bearish divergence here on these 5-minute candles, the 1-minute candles too. So I think we're going to see one more lower low, and I can scalp a quick $100 out of the market. This isn't my usual style of trading, but I see an opportunity here, so I'm just going to try and take it and go for it. We'll see how it works. This is what I use as my confirmation, by the way. I already had a imaginary line set up in my head, but if you're scalping the 1 minute, using these using exponential moving averages is extremely helpful. So if you're scalping like this, doing like 1-to-1 risk reward ratio trades and just taking what you can out of the market a little bit at a time, then you want to make sure that you are trading on these tests and touches of the 50 EMA and the 100 EMA. Whenever the market is really spread out far away from its moving averages, you see how large the gaps are between these moving averages. Whenever you are really far apart on these and you see a cross that is bullish on the MACD, and I strongly recommend this price clouds oscillator created by Peaceful Lizard on TradingView. This is an excellent trading signal. It works on all time frames. But if you see these, if you see this cross down, and you see a divergence on the RSI, like this is a good example. You have a flat price level on the RSI, but the RSI has gotten strong. This is a time to buy. You enter in on this signal and ride it to the upside until it touches one of these moving averages, and then you exit that position as soon as you get a touch. And if you want to be conservative, go for the 50 EMA because you'll get way more touches on the 50 than you will on the 100. But either way, trading those touches of those moving averages, you wait until you get a divergence between the RSI and the MACD, or just a big cross down rejection off of this. Like this is a clear rejection candle. It touched the EMA, crossed through it, and then got punched back down very quickly. That's a good entry opportunity. If you want to wait a little bit longer, you can wait for a more clear pattern to develop, such as this one, which is actually a tiny bear flag. So since we had this bear flag forming, I saw the stock getting rejected right here. We actually threw this little hanging man candle, and I took that as a sign that this was a good entry opportunity. So if you notice, I got in right here. As soon as this wick touched, I got my fill, and now the market's heading down in my direction. So I'm just going to let this ride, and I'll scalp my profit out right here after the market makes a new lower low, or I'll exit before. Well, I've only got 6 minutes, so come on, Spy, let's go. For lack of a better word, greed is good. Shout out if you guys have ever seen that movie. Can we take a look at Tesla? Yeah, absolutely. We'll take a quick look at Tesla. Let's make sure I don't get stopped out of this trade. All right. Oh boy, Tesla. Man, I should have bought puts on Tesla when this diamond pattern broke down, and I didn't because I was like, man, it's already so low. But it looks like it's heading all the way back down to the bottom of this channel. If now here's the thing, we've got 2 patterns on Tesla on the long term. You have this megaphone, which is purple outline, and this is saying that Tesla can go as far down as like sub 100 in the next 2 months. So that's a thing to be very careful of. Tesla has this is like a very extreme case, but Tesla has a lot of things going wrong right now. The forced acquisition of Twitter in an unfavorable deal that did not go according to Elon's plan, and he's been getting punished repeatedly by the courts, by the SEC. They're all constantly harassing him. And right now, the market is not in favor of consumer durables, especially electric vehicles, So Tesla's sales are getting punished. Now their earnings were better than expected, admittedly. Their revenue took a big hit, but their earnings, their profitability was still good, still in the positive spectrum, and it was better than expected. Um, and to Persephone's point, Elon is um, descending into madness. At least it looks that way. The guy's really getting super vengeful. At least that's how I'm interpreting the way that he's treating the employees of Twitter. People can feel free to disagree with me, but the increasing of hours, no salary increases, job cuts all across the board, locking people out of their systems and offices, um, forcing people to take on more work with no additional benefits, and taking away time off all at once, just all at once, is like a massive blow to morale across the company. You're going to see a wave of people at Twitter just fleeing for the doors because, why would you stay in that environment? It's super hostile. And Elon's making it hostile on purpose. You can create a lot of dissent in the company very quickly just by hitting people where it hurts the most, which is time with their families and forcing them to take on more work that they otherwise, never signed up for. So the way I see it is there's two levels that Tesla can fall to. It can either drop down to the 160 level here in the next couple of months and hit a bottom and then bounce back to the top of this channel, or if it ends up doing this instead, where it starts riding this channel back to the downside, then eventually it's going to break down along with the rest of the market. I expect that in the spring is when this crash is really going to get going, but this is the scenario where I see Tesla going way down, hitting new lows below $100. Somewhere in this range is within the realm of possibility, although it seems like really extreme. The last time that Tesla was trading in this area, and keep in mind that there's been a stock split since they were trading. There's actually been two splits since it was trading in this area. So Tesla is way overvalued on its price to earnings ratio. So that by itself should tell you all that you need to know. People say like, "Oh, I can't go lower than this." Like, there's no way. It's worth so much. The stock price was so high. No, not true. This thing can collapse as far back down as where it reached its original heights in before the COVID crash. Keep in mind that this was a short squeeze that happened in Tesla, and it came back down and then went past it. So Tesla could go, it could even go back all the way down to $25. It's possible. Think about where Avis Budget was trading. Avis Budget after COVID, it went from $19 or like $10 all the way up to $510. And then it's come back down to here. I think that Avis Budget's probably going to come back down even further. But that's just me, I'm looking at where its price is versus where their earnings are, and even though they've done really well, that doesn't mean that their valuation makes sense. So Tesla's in a very similar boat. That's going to be my time, guys. I'm going to have to cut out early here. Just to recap, remember that we are trading in a bear market, so always be sure that you're trading with the trend. The trend is your friend, and look to all of the technicals in your favor. If you want to learn more about this strategy and you want to get educated on how to make the market work for you in this way, I encourage you to join Hell's Trading Floor at hellstradingfloor.com, where you can join our Discord at discord.gg/Hell's Trading Floor. And if you wouldn't mind, before you walk out, please leave the video a like if you were enjoying the stream, and subscribe for more content in the future. That's going to be it from me, guys. Thank you guys so much for watching. I'll see you next time. But until then, have a hell of a time in the markets.